Hello friends. In this week's video, I will cover the impact of RBI's notification on withdrawal of 2000 rupee notes, Finance Ministry's decision on tax collected at source for international spends using debit or credit cards, and also SEBI's major intervention to streamline the expenses associated with mutual funds. We will also cover how financial markets performed last week. I will share a real life example of a life insurance claim rejection and how such rejections can be avoided. My name is Raghu Kumar, a certified financial planner by qualification and founder of FinSim. RBI on May 19th declared that all 2000 rupee notes will be withdrawn from circulation and has given the public time till September end to either exchange the notes or deposit it in their bank account. Unlike the demonetization which we saw in 2016, this is not likely to have any major impact on the economy or the public. When we did a quick survey to understand how many of our clients are holding 2000 rupee notes, less than 5% individuals said that they have these notes with them. It's been quite some time since we saw ATMs disbursing 2000 rupee denomination notes. Major difference between 2016 demonetization and this week's circular is due to the mammoth rise in usage of UPIs for payment. UPI also witnessed a 60% increase in payments on an year-on-year basis, and the trend shows that it will only move upwards. Individuals are moving away from cash transactions to electronic transactions. There will be a minor inconvenience to genuine taxpayers, but the only individuals who need to be worried about this move from RBI are the black money holders, who will be in trouble when they try to exchange or deposit these notes. If you hear someone complaining about this particular move from RBI, you know the reason why they are crying about it. Finance Ministry on May 16th issued a notification stating all international transactions made using credit cards have been brought under the scope of RBI's LRS, which permits Indian residents to send up to $250,000 in a financial year abroad without prior approval from the central bank. Further, it will be also subject to tax collected at source, that is 20% for all the transactions. Many individuals who had planned for their international travel later during the year now will have to provision for additional 20% in their budget. This announcement was met with severe backlash from public. Following this, the government on May 19th amended the notification and stated that it has exempted any payment by an individual using their international cards up to rupees 7 lakh per financial year. Market regulator SEBI has proposed a list of changes to the total expense ratio charged by the mutual fund schemes to investors. This is aimed at enhancing transparency in the cost charged. Some of the major changes proposed are: 1. Total expense ratio should cover all expenses incurred and charged to the clients. Currently, brokerage and exchange charges are sitting outside the scope of TER. This will ensure that the cost to the investors will go down eventually. Second, mutual fund houses can take limited membership in exchanges in order to reduce their brokerage charges, which will be eventually passed on to the clients. Third, which is a major one, SEBI also proposed performance-based total expense ratio, and it can be charged with two approaches. In the first approach, mutual fund house can charge base expense ratio to the investor during the period of investment. And when the investor decides to redeem the investments, if the annualized returns from the scheme is more than the hurdle or the benchmark rate, then performance fee may be charged by the mutual fund schemes. At the end of the day, when an individual tries to redeem the fund, the amount of money which he would receive will be less than the portfolio amount, because certain amount of fees would be deducted in this approach for performance related charges. In the second approach, mutual fund houses will include performance based fees plus total expense ratio to the clients for the entire tenure of the investment. When the investor decides to redeem the investments, if the annualized returns from the schemes do not exceed the hurdle or the benchmark rate, then the performance based fees will have to be reversed and paid back to the investor. Quick glance at how the financial markets performed last week. Major Nifty indices were trading flat last week. On the sector side, pharma sector corrected by almost 3% primarily due to poor performance by Dr. Reddy Labs and Sun Pharma. Gold lost about 1.11% and crude oil moved up by 2%. Rupee depreciated by 0.79% to end the week at 82.91 rupees per dollar. Contrary to domestic markets, global markets posted decent gains. Major US indices S&P 500 and Nasdaq were up by 1.65% and 3.04% respectively. FTSE was flat, DAX moved up by 2.27% and MSCI Emerging Market Index was up by 2.27%. Time for a lesson on personal finance. This is a real life example. On Saturday, I received a call from a prospective client seeking assistance in insurance claims. His father had availed a property loan about 2 years back, and the bank which issued the loan also sold him an insurance policy against the loan, so that in case of any unfortunate event, loan will be taken care of by the insurance company and family will not have to bear the burden. Unfortunately, his father passed away in 2023, and when the claim was raised with the insurance company, it got rejected with the message that pre-existing ailments were not declared while availing the policy cover. I have suggested the individual to gather the proposal form which was submitted at the time of policy issuance and also seek a copy of voice record of telemedicals done by the insurance company. Most of the insurance companies do that before issuing the policy. This is ideally the responsibility of the agent and in this case the loan issuing bank. Banks cross-sell these insurance policies but they usually do not provide the required amount of support during the proposal filling and claims period. As the employees of the bank would have targets to comply and meet, they might sometime not reveal the information which might result in the proposal getting rejected, and they proceed with the policy issuance. During the time of the claim, either the respective employee will no longer be associated with the bank or the branch or will deny any malpractice on his or her part. Over the next 2 minutes, I will explain some of the reasons why insurance claims can get rejected and how you can avoid it. While filling the insurance form, ensure all material facts like pre-existing ailments are declared. More the information, better it is in the proposal form. Some individuals do not declare smoking or their drinking habits as this would increase the insurance premium. Please refrain from hiding such crucial information as this will be found out during the claim process and the nominees would not be paid any insurance coverage amount. Ensure your premiums are paid on time or within the grace period. Suicide during the first 12 months of the policy is not going to be covered in insurance. Homicide by the nominee will result in insurance company rejecting the claim. In plain simple words, if the nominee has a role to play in the death of the insured, insurance company is not obligated to pay any insurance claim. If the death of the insured is a result of him or her engaging in any unlawful activity, no claim will be settled. Example might be meeting with an accident while being chased by the police, or death of the insured while he or she is attempting burglary. Last but not the least, timely notification by nominee with the insurance company. Many a times nominees would not be even aware of the insurance policies availed by the insured, and the claims are never made or made after several years or months. This will result in delay in settlement of claims. Hope you like this new series. If you like the video, please do not forget to subscribe to our channel, like the video, and also click on the bell icon to receive notifications as and when new videos are uploaded. You can always reach out to us on the mobile number and the email ID listed on the screen for a 15 minutes consultation without any obligation, and we would be more than happy to assist you with your queries. Thank you.